So this came to me the other day. Reverse mortgages are booming in Canada. Dateline just a few days ago on MSN or MSN.com, Money Magazine. I don't even know what Money Magazine is. It's still out there anymore, but MSN. Don't pay till you die. Reverse mortgages are booming in our great neighbors up to the north. Reverse mortgages are surging in Canada as more people join the country's debt bandwagon. If you're 55 and older, you can borrow as much as 55% of the value of your home, and principal and compound interest don't have to be paid back until you sell the home or die. Man, I love it. I wonder if I can move to Canada. I'll go to Prince Edward Island, buy me a house, take reverse mortgage, never pay it back. Let the markets do what the markets do and live like a king. And go fishing all day long and smell the salt water. And then pay, I don't know, what do we pay up there for heat? What do you have for fuel up there? Oil? But thankfully, because of George Mitchell and fracking, we can. And then, of course, Canada Sands, there was a tar sands or something like that. Plentiful oil in Canada. Plentiful. So I imagine the oil is not that expensive. All right. Principal and compound interest don't have to be paid back until you sell the home or die. To keep the loan in good standing, homeowners only need to pay property tax and insurance and maintain the home in good repair. We've only been in this market for 18 months, but applications are jumping, and they have tripled over the past year, says this guy from Equitable Group. The company, which operates Equitable Bank, sees the reverse mortgage sector expanding by about 25% a year. Canadians are getting older, and there's an opportunity there. Is that Equitable Insurance Company? I guarantee you, with what this is growing, there's going to be more and more banks coming into there. It's going to be more and more of a competitive market, which, because capitalism always rules, it'll be more and more price efficiency for you, the end consumer. I guarantee. 25% a year expansions is what they're predicting. Outstanding balances on reverse mortgages have more than doubled in less than 4 years to 3.12 from to 3.12 Canadian, excluding foreign currency amounts, according to June data from the banking regulator. Although they represent less than 1 percentage point of the 1.2 trillion of residential mortgages issued by banks, they're growing at a much faster pace. Well, yeah, so let's just put this in context. Dave Ramsey and others say reverse mortgages are scams. All right, so it's 3.12 billion Canadian in a market, a mortgage, first and second mortgage market that has, 1.2 trillion of debt outstanding. Where's the scam here? It ain't reverse mortgages, man. If there's a scam, it's first and second mortgages. The fact that these niche products are growing so quickly offers a glimpse into how some seniors are becoming part of Canada's new debt reality. After a decades-long housing boom, the nation has the highest household debt load in the group of 7. One reason the Bank of Canada governor may be reluctant to join the monetary policy easing trend. The Canadians have the highest household debt level in the overall group of 7. One reason the Board of Canada Governor Stephen Poloz may be reluctant to join the global monetary policy easing trend. Well, I don't know. That doesn't make sense. If you're worried about the high debt load in Canada, wouldn't you want to join the easing trend? I don't get that. Anyway, let's see what we got here. Monthly growth rate, a year-to-year basis, reverse mortgages. I'd actually say flatten off quite. They dropped by 20% over the last, about a year. And that's weird. But anyway, you can see they've grown by over 20% since 2017. And that's a couple of years, but still much higher growth than first mortgages in second. More seniors are entering retirement with debt, and the cost of rent has shot up in many cities, making downsizing difficult amid a hot real estate market. Reverse mortgages offer a new source of income. And Canada's big 5 banks have so far shied away from the product. Only a matter of time for they get in. Only 2 lenders offer them in Canada. Home Equity Bank, whose reverse mortgage market has been on the market for 30 years, dominates the space with $3.1 billion on its books. And Equitable Bank, a relatively new player, has $10.1 million. Shares in the parent Equitable Group have surged 75% to a record this year. Critics say reverse mortgages are a high-cost solution that should only be used as a last resort. Sean Stillman, a broker at Mortgage Outlet, said what they think of their cash flow, they're not going to get kicked out of their home, but in reality, it really has the ability to erode the asset of the borrower. Well, so doesn't taking freaking money out from a retirement account. If you're taking money from a retirement account, that erodes the asset from the owner too. Higher rates. Interest rates are typically much higher than those for conventional mortgages. For example, home equity and Equitable Bank charge 5.75% for a 5-year fixed mortgage. Conventional 5-year fixed mortgages are currently being offered online for as low as 2.4%. I guess that's a 5-year fixed mortgage on a reverse mortgage. The chief financial officer of Home Equity Bank said the higher rates are justified because the lender doesn't receive any payments over the course of the loan. 100% right. Our time horizon for getting the cash is much longer, and generally the longer you wait for your cash, the more you need to charge. I completely agree with that. Executives at Home Equity Bank and Equitable say they're focusing on educating people about reverse mortgages to avoid mistakes that were made in the U.S. during the housing crisis. While delinquency rates on reverse mortgages are still low, they were the highest among all age groups in the first quarter at 0.36%. The 65-plus demographic took over as the most delinquent group at the end of 2015. For non-mortgage debt, delinquency rates in the 65-plus category has seen the biggest increase over the past 7 years. Well, reverse mortgages aren't included in typical delinquency rate measures. Borrowers can be late on payments because there are no payments, but they can be in default if they fail to pay taxes or insurance or let the home fall into disrepair. However, default rates for reverse mortgages have remained stable even with the growth in volume, said the home equity banks. And according to a scenario provided by Home Equity Bank, a borrower who took out a reverse mortgage of 150 Canadian at an interest rate of 5.74 would owe 200,000 5 years later. A home worth $750,000 when the reverse mortgage was taken out would be worth $870,000 5 years later, assuming 3% home annual price appreciation. And the total equity have only grown by $70,000 compared to how much the debt had grown. So they would have the $750 was your home value 5 years ago. It's worth $870 now, so that's $120,000 would have grown. But your debt would have grown to $50,000, so you've only netted $70,000 of that growth. Well, that's the risk, man. But anyway, I thought that's pretty interesting. So go Canada, tear it up, man. 55 and older, you can take out 55% of the value of your home. Freaking love it. You should be thinking about that for sure. All right, we'll see you next time.